record. Okay, so it's recording now. That way I can upload it into the class later. Okay, so let me erase this. And I'm going to tell you a couple of things. And this is going to help you out. Can you hear me pretty well?
Yeah, I'm going to get my headphones, actually, because my daughter has her tablet up.
Okay, my son is downstairs playing Fortnite, so...
Oh, God.
If he starts yelling, I'm so sorry.
That's all good.
Okay. I'm like, I need at least one person to talk to.
Can you hear me?
I can.
Okay.
Okay. Someone sent me a message. Actually, a message came across my screen. I have no idea how I got there, but it's okay. I'm going to come back to where you are, and I'm going to figure out my life. Okay. So this is the thing about accounting. Accounting is one of those subjects where it is completely separate and not related to banking. So usually what happens is that in the banking arena, our concept of credit and debit will completely skew our concept of credit and debit in accounting. Give me 1 second because my son is gonna make me kill him. DeRay, you gotta be quiet. Okay. He just lost the last one and he wasn't very happy.
That game's addicting.
It is. I love watching it myself, so I get it. So the concept of credit and debit in the banking arena is more of a, like, in our minds, a credit is like adding money, right? I have horrible handwriting. And a debit equals taking away money, right?
Mm-hmm.
Okay. So in accounting, none of that is how it works. Okay. Accounting is based off of a bunch of T tables. And with these T tables, you have one side that's a debit, the other side that's a credit. So the left side is a debit and the right side is a credit. But that's all that it means, literally. And the reason why it's done that way is because when you go through the entire process for accounting, the debits being on the left side means something and the credit being on the right side means something. But it's not the same meaning that we think that it is in banking. It literally just means left side of the T table for debit and right side of the T table for credit. Okay?
All right.
So far in chapters 1 and 2, you've learned that there are 6 major categories in accounting, right? So with those 6 major categories, you have assets, you have liabilities, you have revenue, you have expenses, you have drawing, and you have capital, right?
Mm-hmm.
All right. So for me, my thought process when I think about these, I kind of join them together. So assets and liabilities are joined in my mind. Revenues and expenses are joined in my mind. And drawing and capital is joined in my mind. So these are like light categories to me. So assets are all the items held in the business. right?
Right.
So this is all of your supplies. It could be your inventory. It could be your equipment. And it's also money owed to you.
Right.
I feel like if I say it while I write it, it's not as bad because you know what I meant to write.
Right. Right.
All the liabilities is money you owe out to people. That's a you. And then your revenue is money made, or yeah, we'll say money made. Some of these words have to be changed depending on what definition you use. Expenses is the what you spend to make money. Or to make revenue. And then drawing is the amount the owner withdrew from the business. And then capital is the amount the owner invested in the business. That says business, I swear it does. Okay.
All right.
I wrote that wrong. Okay. That's a B. Okay. So with that being said, I memorized what I'm about to write down to you, and I still use this today, and I am like 17 years in of doing accounting. So I break these 6 items down into 2 different categories. I have DEA and I have CLR, okay? And that just helps me memorize what type of T-table is created with each one of these. So my first one is going to be drawing. My second one is expenses. And my third one is assets. Okay.
All right.
So with these, when I create my T-table, I create my T-table before I even put my numbers down so that I don't have to think about it. Okay. So notice that on these 3, drawing is a plus, credit is a minus, but that's not always the case. Okay. So this T-table is a plus minus, meaning that when I look at one of the entries or one of the transactions, if I want to increase the dollar amount in that account, I'm going to put it on the plus side. If I want to decrease the dollar amount in that account, I'm going to put it on the minus side. The same thing is going to go for these 3 over here. It's just that it looks different because the plus minus sign is opposite. So for here, we're going to have capital. We're going to have liabilities. And we're going to have revenue. So these are minus pluses instead of plus minuses. Does that make sense?
Yeah.
Okay. So I'm going to erase the top part. Might take me a second. Hold on. All right. So once you have these concepts, and I think that you guys have already gone over the formula, but I'm going to write the formula down anyway.
All right.
I think it's A, correct me if I'm wrong, A equals L plus OE maybe. I don't think that's the formula. Okay, so when we get a transaction, so you got this DEA, you got that clear, right?
Mm-hmm.
All right, so when we get a transaction, and like the transaction will say, I'm going to be the business owner, and it's going to say LaShonda invested $50,000 into business. So I think what's difficult sometimes and what you forget is that investments is capital,
Okay.
right? So if I invested $50,000 into the business, I have to look at this as each account is a bucket. So right now, since the business has not started, this capital account has a balance of 0. So the bucket has $0 in it.
Oh, I'm sorry. I went in a different room. My daughter's trying to attack me. I'm sorry.
She's on it. She's trying to learn too.
Yeah.
She's like, I can do that.
All right. I'm ready. Sorry.
Okay. So if so this business doesn't have any money in it just yet. I'm gonna invest this 50,000, and that's gonna allow me to make some money off of everything, right?
Mm-hmm.
So right now, this capital bucket, all the buckets right now have $0 in it. If I put $50,000 in it, that means that I want to increase this account by 50,000. So I'm gonna put $50,000 on this side. Make sense?
Yeah.
Okay. In accounting, if you have a credit, you must have a debit, and at the end of the transaction, they must be equal. There's no way to escape that. They have to be equal. Okay. So, I can move this over here. Great. Okay. So if they have to be equal, then I need to have a debit somewhere. And invested $50,000. Usually in the book, it tells you that it's cash. So let's pretend that I had cash up there.
Okay.
So cash is one of the items that's an asset. So my debit is going to go on this side. Okay. So when you look at my formula becomes 50,000 equals 0 plus 50,000. So it's equal. And that's the whole chapter 1. That's just what they're trying to explain to you. They're trying to help you understand the relationship between T-tables and the formula and the transaction. So that's how that works. So if I make my next transaction, I paid cash. So I paid $1,000 cash for supplies. So now, when it says stuff like this, the difficult part about this and what you have to understand is what category does each one of these different transactions that they give you, what categories are you hitting, right?
Right.
So if you know what categories you're hitting, then you'll be able to put them in one of these T-tables. And I do T-tables for everything. And the reason why I do that is because that's how you learn the full process. So every transaction that I did, I do a T-table, whether it be in chapter 1 or chapter 2. And that's how I taught my my on-ground class. So supplies is an asset. And I could have supplies right here, but I'm going to keep it at assets for now. And then further down the line, I'll change it to specific types of categories. And this just helps the person who's reading the trial balance to know what type of asset it is, right? So that's the reason why they break these down a little bit further. That's why if you look at a person's financial statements or their trial balance, you won't see drawing or expense or, assets as a total. You'll see supplies, you'll see inventory, you'll see cash, you'll see accounts receivable. You'll see it broken down because there's no point in having assets as one line item on a trial balance because it's not going to tell a person anything. The sole purpose of accounting is to give information about the health of a business. So the only way to do that is to break it down in categories so a person knows, oh, okay, well, this is how much you have on supplies in your books. This is how much people owe you. This is how much you owe people. This is how much inventory you have. This is how much you have in sales or in revenue or expenses. So the whole purpose of accounting is simply to explain to the world how healthy, how good or bad the business is doing. So with this particular example, I'm going to keep it as assets, but if we pay $1,000 cash for supplies, this one is going to look funny because because cash is an asset and supplies is an asset, right?
Right.
So the cash portion, what happens with my cash? Does it go up or go down?
It goes up.
If I paid 1,000 cash for it.
Oh, sorry, down.
Yep. So my $1,000 is going to go here because it's going down. So I want my balance to go from 50,000 to 49,000 because I'm going to use $1,000 of it worth. I'm going to use $1,000 worth of my cash for my supplies. Now, the other asset, which, you know, both of them are in here, cash is in here and supplies is in here. What happens to some of my supplies? I had $0 worth of supplies before, and what do I have now?
$1,000 worth.
Yep. So my supplies goes up by $1,000. Do my debits and my credits match?
Yeah. Or
Yep. So here's my 40. This is 51,000 here, and then this and this is my other 51,000 because these are both credits. Okay. So the thing I want you to recognize is that when we did that first $50,000 transaction, they were both increases, and that's okay. They can both be increases. They can both be decreases. They can be a decrease and an increase. That's not the rule. The only rule is you must have the same amount of debits, same dollar amount of debits that you have for the dollar amount of credits. Okay. So if it says that perform services for $7,000. Okay. I'm gonna put received cash. So if I perform services, do you remember which category this goes into? Which one of the 6 items?
that you perform. Revenue? No.
Yep.
Oh.
Correct. So it goes into revenue. So does my revenue go up or down?
Just because you're performing, right? It goes up.
Yep. So I had $0 before, right? And now I have $7,000 worth of revenue because remember, what accounting is doing is it's showing you the dollar amount that's in each bucket. So before this transaction, we had $0 of revenue. We want to show that we've made $7,000. The only way to show that is to put $7,000 into that account. So we're going to increase our revenue account by $7,000. So now, since we got cash, we're going to have to put the cash over here in our assets bucket. And our cash, did our cash go up or go down?
It's going to go up.
Yep, because we received $7,000 cash.
Right.
So we went from having, the cash is just the 50 and the 1. So from 49,000, we went back up to 56,000, right? Unfortunately, I'm going to break this down. And the reason why I'm going to break this down is so you can see what our cash is. I'm going to make this 2 different ones. Hold on. So we can see a little better.
Is that good?
All right. So remember, debit and credit, it's always debit, credit, debit, credit, debit, credit. It's never anything else other than debit and then credit. Debit is always on the left side. Credit is always on the right side. Assets are always plus minuses. Drawing expenses and assets are always plus minuses. This is my DEA. The cops, they're going to kick the door down. That's how I remember it. And then
I was going to say that.
It's recorded. Don't forget that. Oh. So everybody have access to this later. And then how I remember the CLR is from the cleaning material clear.
Yep.
So CLR and DEA. And when I tell you, this is how I remembered it from when I was in college, a lot of years ago. I still use this today. I still use the T tables. I never memorized this. I just know the concept. And if I ever forget, I can always remember those 2, DEA and clear. Okay. So this is the plus minus because it's an asset. All right, so we had 50,000 cash here, and then we had 1,000 cash here. So we have $49,000 cash. And then we had, I know we received some supplies. And then we, 1,000, okay, 7. Okay, here's our $7,000 in revenue. All right.
So that's the money we made, right?
Yep, this is the money we made. This is the money we spent on supplies. This is the money we made from performing the service. And this is the money that we invested in the business. And my debits are 58,000. And my credits are 58,000. Okay. So then my fourth transaction, I'm gonna make we perform a service on credit. Right? So do you remember what the on credit account is if we perform service on credit?
Yeah.
I'm gonna create another T table for it.
Okay.
So these two I'll work together as well. This one is AR. And then the one that I'm gonna put over here is AP. Actually, I'm not. All right.
Hello,
How are you?
I'm finding yourself.
I'm doing pretty good. All right, so log myself out. I'm the instructor tester, but now I need to figure out how to disconnect. Oh,
Are you
leave.
writing this down? Sorry.
No, you can come back to this anytime you want.
Okay.
Okay. All right. So for AR, this is a D and a C, and a plus and a minus. If I add one for, hey, Rod, Rochelle, how do you pronounce your name, babe?
Rochelle.
Can you mute your background?
Mute. Oh, yes. Sorry.
That's okay. If you need to say something, come back though. Okay, so for AP, since it's a liability, it's gonna have the same setup, which is gonna be minus plus. Debit credit never changes regardless of which one of the 6 categories it is. Okay. All right, so AR is the account that we use when people owe us money.
That's always a good thing.
I love it. The one I don't like is this one, when we owe people.
Oh.
Okay. This is the concept that you need to memorize. I always memorize that R as receiving money. And I memorize this P as we pay money. Okay. All right. So number 4 says perform service on credit. So we're gonna make it for $3,000. All right. So one of the accounts we've already used before, but do you remember what account we used to show that we performed a service for somebody?
Revenue?
Yep. So does our revenue go up or go down?
Goes up.
Yep. So we want to show that so far we've made $10,000 in revenue in our company, right? Now, in this situation, cash will not be impacted because they didn't give us any money. They came to us and said, hey, hey, LaShonda, I've been knowing you for 50 years. I'm kind of broke right now, but I promise I'm going to give you your money back in 30 days if you just, do this for me real quick. I said, okay, I'm a kind of nice person. I know where you live, so I'm going to go ahead and do you this favor, and then you can pay me back later. But on my books, since I did the work, I need to still record the revenue. But instead of putting it in cash, I'm going to put it in AR. So does my AR balance go up or go down?
It goes up.
Yep. So before I had a zero balance in AR. I want to show that somebody owes me money. And so I want to put that balance over here at $3,000. So now if I create my trial balance, it's going to say that, actually, I'm going to create a trial balance because that is also in chapter 2. Give me 1 second. So you already know what the problems are. Actually, you know what? I can still create I can create it right here. So let's pretend this is my trial balance. It's going to be a rather small trial balance. So this is my trial balance for L&W company. Okay. So my cash account is going to have a balance of 50 plus 7 minus 1, 56. 56,000. And then my AR account is going to have a balance of 3,000. And then so usually you do your assets first and you do which one is the most liquid. So cash is already cash, so it can't be any more liquid. And then AR is the next, has the next highest level of liquidity, meaning you can turn it into cash the quickest. So AR is going to be listed next, and then typically you'll start with your supplies, and then you'll do inventory, so on and so forth. So I'm going to put supplies down. Okay, I guess I wanted to make up a new spelling for supplies just now. And then, so I got that asset, that asset, that asset. All right. It will say total assets in there. And then I want to do my liabilities. So I'm going to have AP. Oh, let me do a transaction for AP first. So 5 is bought equipment on account. Ooh, I like it. Okay, so bought equipment on account. Let's say we bought it for $2,000. Okay, so if we bought equipment on account for $2,000, I'm going to create another T table. This one's going to be for equipment. What side is this going to be? A D or a C over here on this side?
Be a D.
Yep, always. Is this going to be a plus or a minus on this side?
Be a plus.
It's going to be a plus minus because all of the drawing expenses and assets are plus minuses. And equipment is an asset. Okay. So we bought the equipment on account. So does my equipment balance go up or down?
Cause we're purchasing, right?
Yep, we're purchasing new equipment.
It's gonna go down.
Nope, because equipment, how much did we have in equipment before?
We had, I'm sorry.
My handwriting is horrible, but I'm going to tell you because you probably can't read that. We didn't have any equipment beforehand.
Right.
We're just purchasing equipment for the first time, but we don't want to use our cash. We want to do it on account, and then we want to pay them later.
Okay.
So my equipment balance before was 0, but I want it to be $2,000. I want to show on my books that I have $2,000 worth of equipment in my business now. So my business account for equipment is going to go up by $2,000. Cash is not going to be impacted because I didn't pay for it. But my liability account was previously 0, will go up by $2,000 to show that I owe somebody $2,000. The same way the AR account shows that somebody owes me $3,000.
Okay.
Make sense?
Mm-hmm.
Okay, let me erase this AP real quick because I'm going to change that to equipment because equipment is an asset. So that is $2,000 worth of equipment. Then we have our liability. So we're going to have AP. We got $2,000. This is going to go on this side. Put you over here. It's going to go on this side because one of the other things that you learned in this course is when you create a trial balance, the debits go on this side, the credits go on this side, and the balance that's in the account is going to go on whatever side the plus is. So on here, we have, so if I'm looking at cash, I'm saying 50,000 plus 70 plus 7,000 minus 1,000. Well, it's going to be 56,000, but it's going to go on this side because that's the side that's the highest. It's also the side that's the plus. You should not have a negative cash balance. You should not have a negative expense balance. You should not have a negative drawing balance. So none of the, why is my C like that? That's going to confuse somebody over here in drawing. This should just be a minus. Okay. So so credit balances are not normal. I'm sorry. I take that statement back because that's not a correct terminology. Negative balances are not normal. You should always have positive balances. So AP is a credit account. Oh, sorry. I forgot that I had created AP as its own T table. Although it wouldn't matter if you did liability or T table, it's the same, or AP is the same thing. All right. So AP is going to be $2,000. And then do I have any other liabilities? No. And then we're going to do our revenues. So we have revenue. All right. So then the revenue account balance is going to be 10,000 on the credit side. So should I put the $10,000 here or should I put it here?
Right hand side or left?
Right.
Right.
The reason why is because the balance is on the right hand side.
Got it.
So since the balance is a credit, it's going to go on the trial balance as a credit also. So I'm going to put this $10,000 here for revenue. And then after revenue, we have, so I got cash, AR supplies, equipment. I got revenue. I did not create an entry for expenses. Let's make up one. I'm going to put it down here. I'm going to put pay utilities. Nope, I don't want to add it because then I got to, yeah, I'll do it. Pay utilities, $1,000 cash. So now I have to go back, and since my cash amount is going down, right? I'm going to put another $1,000 here. So this 56,000 is now going to be 55,000. And this happens in real life. Like you got to go back. Like you found an invoice, you got to go back and change everything once you find an invoice. So, and then for my expenses, since my expense account before was zero, meaning that I didn't see any expenses, and now since I have this utility expense, I'm going to increase my expense account by $1,000. Another concept that people struggle with is knowing the difference between supply, like assets, like supplies, and expenses like utility. So supplies are things that you kind of hold on to in the business and you use them in order to make more money. Whereas expenses are things that get expensed right away and you use them at that time in order to make the money at that time. So an example of that will be rent expense. So you're going to use the rent of that building at that particular time. You're not saving it. Or supplies expense. So you can have supplies as an asset or you can have it as an expense. So like stuff like pens, papers, ink, stuff like that, you might say is supplies expense. But things that maybe like your, I don't know, whatever kind of supplies last you a long time, like maybe your whiteboard or something like that, you want to keep it on your books as part of like your, as your assets. Most people typically, write off expenses right away, but it's really a choice. Okay, so we got our expense account. So I'm going to add this expense on here. One of the other things that you would have learned is that these two directly affect the P&L, the financial statement, the profit and loss. The income statement is another word for it. These up here, these assets and liabilities, these are typically on a balance sheet. And the next one that we're going to put on here is capital. Expenses is a plus minus. The debit is on the plus side, so I'm going to put the balance of expenses right here on the debit side. Capital, we invested 50,000, goes here. It goes on the credit side, and then we have $0 of drawing. I just didn't take any money out yet. All right, so to know whether or not we did our transactions right, we add all these up. So I got 50, 60, is that 62,000?
Yeah.
And then the other side, I better have 62,000 too, or I suck as a teacher. So 55, 60 with a 3 and a 2, 62. So my credits and my debits balance. That is the accounting process. Make sense?
Mm-hmm.
I know that was a lot, but you guys have kind of worked on a lot of this stuff throughout the past 3 weeks. So I just wanted to give you some pointers or some hints as to how to kind of work through all of the stuff that's in here. So clear all my drawings. I'm going to clear this away. And then I just want to go back to tell you the things, the little cheat things that I want you to know moving forward. I want you to remember that there are 6 categories in accounting. Rochelle, are you still there, babe? So we have DEA. So drawing, expenses, and assets. These are always going to be debit credit. Every time. So are these. I don't even know what these are yet. And they're still going to be debit credit. Rochelle, are you there? Can you unmute me? Now these 3 are going to be plus minuses. Hey, girl. Okay, so these 3 are going to be plus minuses. These 3 are going to be minus pluses. Always. I don't even know what they are yet, but I know that those 3 are plus minuses. This side is going to be CLR from the cleaning solution, clear. The DEA is from the police. C is for capital. L is for liability. And R is for revenue. I believe that you should have this written down before you even start your work. If you have this written down, it's one less thing you got to think about. Accounting is not it's conceptual. You really have to understand the concept in order to change up the problem and still get it correctly. Because if you try to do it the same way you did it last time, the likelihood of you messing it up is high. But if you continue with the basic concepts, it'll make it easier. Your debits must always equal your credits. The transaction can have 2 pluses, or it can have 2 minuses, or it can have a plus and a minus. Okay? What else did we talk about? Each one of these buckets can be broken down You can have utility expense. You can have rent expense. You can have, what's another one? You can have, I don't want to say supplies, but that's confusing because they use supplies a lot as an asset in here. I can't even think of anything. And it's like a million of them. Drawing is going to be money, the owner withdrew. Capital is going to be money, the owner invested. Liability is going to be money we owe. So it could be a mortgage, notes payable, or just regular old accounts payable. Okay. So accounts payable is a normal one that we use, and it just says, hey, we owe somebody this money. Revenue is the value of services performed. That definitely says services. Or products sold, or however else you choose to make money. Expense, let me see what, assets. Assets is going to be all of our supplies. So it's all the stuff that you can physically touch in your business. There are some other ends, some like tangible assets. There's some assets that you can't touch, like copyrights and stuff like that, but they're not even going to go that deep into that in this course. So you got supplies, you got equipment, you can have computers, chairs. I mean, you could just have, I mean, it's literally everything if you look around. Like if your house was your business, it would be your couches, it'd be your refrigerator, your dishwasher, all of that stuff would be asset for you. This makes sense?
Yeah.
Did you guys have any specific problems on any of the homework assignments or any of the concepts that you had a question with?
Some of them like on assignments.
Mm-hmm.
It's hard for me to remember, but I was having a couple problems. I'm trying to remember what the problem was.
So I'm gonna see if I can. Give me a second. Let me see something. Clear all drawings. I wonder if. What if I can share my screen? Okay, I'm gonna do new share. Okay. I won't be able to see you guys. Can you see yourselves at the top right now?
Yep.
Okay, cool. So I should be able to share my screen. Okay, so I took my keyboard off. So, I'm gonna have to figure this out. So give me 1 second because I don't know how to use this. Okay. Do you want to exit tablet mode? Yes, I do. Okay. All right, I'm on a good start. And right now, you guys can see my Google.
No.
What can you see right now?
White screen.
Still a white screen? Okay, hold on. What about now?
Yeah, I see. Yeah, I see Google.
Okay. All right. I'm gonna do one of the big assignments. It might be something that was for homework, but it's okay. We'll be all right. I'm not gonna do week 3. I'm gonna go back. I'm gonna do one from week 2. What does that mean? Oh, let me try this again. Okay. So here is week 2. And I'm going to do I'm going to do an entire problem with you guys. And then literally once we do this one, all of them are the exact same way. Until you like introduce yourself to a new concept, but that's not until chapter 3. So as far as chapter 1 and 2 goes, this is the hardest that it'll be. All this stuff is up here. I can't see. Let me see what problem this is. Did you guys have any problems with these?
A little bit.
Okay, so let's go over it then. All right. So it says determine the ending balance of each of the following T accounts. And I think that the problems may be met. Am I a student view? Yeah. No.
I had a problem with that one.
Okay, I'm gonna go back to that one. I'm gonna do this one first. Oh, ending balance. That's all it wants to know is ending balance. Okay, so this is the one where I said you just put the number on whichever side is the largest. So the debit side, which is this side. Oh, it won't let me hit the other boxes. So this side right here that says 320. That balance is going to be 420. This balance is 110. So it's going to be 420 minus 110. So the balance is 310. Does that make sense?
So you're minus what part again?
So remember when I was doing like the debits and credits on the other screen?
Right.
This side that says 100, 320, that's the debit side. This side that says 50, 60 is the credit side. Okay. So 100 plus 300 is 400 plus 20 is 420 minus 110 is 310. So you put the balance on whichever side is the highest. Because this had 420 and this only had 110. But basically what you're trying to figure out is what number to put on the trial balance. You can't put all of that on there, right? Because the trial balance is just a consolidation of all the transactions. So remember, this $100 was a transaction, this $300 was a transaction, this $20 was a transaction, this $50 was a transaction, and this $60 was a transaction. So all of these transactions happened in that month time frame. DeRay, I'm gonna turn off the internet. So the balance of these accounts is this $310. I'm sorry, of these transactions for this particular account is $310. So if we look at the accounts payable balance, we know which side is going to go on, right?
Right.
It's going to go on it. Yep, it's going to go on the right hand side. So we're going to say 8,000 minus 2,000 minus 2,700. So our balance is 3,300, and it's going to go on that side. So the next one for supplies is going to be 10,000 plus 1,100 versus 3,800. So which side is it going to be on?
The left.
gonna be on the left-hand side. So 10,000 plus 1,100 equals 11,100 minus 3,800. So our balance is gonna be 7,300. Make sense?
Mhm.
All right. The next one is going to be 150 plus 150 plus 150 plus 100. So that balance is 550. We compare it to the 600. So which side is it going to be on, right or left?
You're right.
This is the right. The right balance is 550.
Okay. Left.
Left balance is 600. Since the 600 is larger, we have $50 left. So 600 minus the 550 is $50. The next one, it doesn't have a balance, so it's just 0, 0, right? Which makes sense. The wages payable, this was, we wrote, we knew how much money we owe people, but maybe they don't get paid until 3 weeks later or something. So you just put on there that, hey, we owe them this amount of wages. The offset to that somewhere else is wage expense. So there's a transaction for $700 on another T table somewhere that has wage expense on there. And then when it came time to pay, we went on ahead and zeroed out this payable because now we don't owe anybody anymore. And we decreased cash at some point. Don't ask me why it's not up there because I would have put it up there, but they didn't. It's okay. So on the very last one, that is cash. We're going to add up the left-hand side and the right-hand side. Give me 1 second so I can do that. All right, I got 11,000 plus 800 plus 100 equals 11,900 on this side, and I'm not going to remember that. So I'm just going to put it over there. That's not final. I just wanted to remember. Okay, so this side is 11,900. The other side is 11,800. So which side should I put it on? And what dollar amount should I put there? You're on mute.
Can you hear me?
Would it go on the left side?
How much?
$100?
Yep. So 100 goes on this side. We're going to delete that. And then I think that is everything. So then we're going to check our work to see how we did. Yep. So we are good to go, 100%. The next one, now this is for all the marbles. All right. So this one, I think it had like required 1. Yeah. Okay. So this one has required 1 and required 2. All right. So I'm going to go through these. So you guys are not here all night. But if it doesn't make sense, make sure you stop me, okay? Because I'd rather explain it. And especially have it on video so that somebody else, if they need it, they can look at it. So Casey Spade, who's the owner, he invested $100,750 cash into the company. So I'm going to create the T table first because I just really enjoy my T tables because I know it's correct. So remember our dollar amount is $100,750. The first thing we need to do is figure out what accounts are impacted. So since she paid cash, we know it's going to be cash. And since this is an investment of the owner into the business, the other one is going to be capital. Okay. So on our T table, this was number A or letter A. And then this is just asking us, so this is the debit, this is the credit. The A just represents the problem that it is. So for cash, it was $100,750. And then her capital account, remember we drew, I can't draw it right now, but remember we had 3 of them as plus minuses and 3 of them as minus pluses. So capital, I need a little notepad. I think I can do a post-it. Sticky note. There we go. Okay. I opened this 58 times. That was going so slow. Now I need to see if I can draw on it. Oh, awesome. All right, so capital is a minus plus account. Debit, credit, okay? So since that is a minus plus account, we want to increase the capital account because before the balance was 0. Now we want the balance to be $100,750 to show that we increase this account by $100,750. So for letter A, this is going to be $100,750. Cool?
Yeah.
All right. So my debits match my credits. Okay? So in order to do a journal entry, that's not what I wanted that to do. I just wanted it to stay there, but that didn't happen. All right. So when you create a journal entry, the debit goes first. So my journal entry is going to say cash, and it's going to be $100,000, $100,750, and then you're going to indent it a little bit, and then you're going to do capital. So whichever one is a credit balance. So this is a credit balance. This side with capital. This is the credit, debit. Remember, credit, debit, credit, credit, debit, credit, debit, credit. Remember, left-hand side is all debits, right-hand side is all credits. So our credit, which is capital, is going second. All the debits always go first. Debits go first, credits go second. So $100,750, and then you indent it. So this is our journal entry. So we can go back to required 1. And we're going to choose cash because cash was our credit. And we're going to choose capital because capital was our, cash was our debit, capital was our credit. So $100,750 for that. And then $100,750 for that one. So that's A. Okay. So then number 2 says the company purchased office supplies for $1,250 cash. So then we think to ourselves, what are the 2 accounts impacted? So 2 accounts, I always go with the easy one first. That's going to be cash, right? Because it says that we use cash. The company purchased office supplies for $1,250 cash. So cash is going to be 1. Then if you don't automatically know what account you want to use, you can come over to required 2 and see what our options are. So we got cash, accounts receivable, office supplies. I know it's office supplies. So we use cash in order to purchase office supplies. So this is letter B. So let me get my note again. because I want you to see what my thought process is when I create these transactions. So I know I'm using cash, and I know I'm using supplies. So now I got to think about what's my debit, what's my credit, what's my debit, what's my credit. Then I got to think about, are these plus minus accounts or minus plus accounts? Well, cash is an asset. Supplies is an asset. We know that D, E, and A are plus minuses. Then I ask myself, do I want to increase this cash account or do I want to decrease this cash account? Since I'm spending my money, I'm going to decrease this cash account. I have 100,750 in there, but I'm going to use, I don't remember how much it costs. I don't remember. 1250. Okay. So we're going to use $1,250 in cash. I got my credit. By default, I have to have a debit, but that's okay because I'm going to say that my supplies account was 0, but I now have $1,250 worth of supplies. Now my debit, my credit equals my debit. I've done everything right on this transaction. So since my cash is a credit, I'm going to put it on this side. So B, we're going to put $1,250 here. And then it was office supplies. Office supplies was a debit. So there's my $1,250. So B, $1,250. All my debits and credits still match. That makes sense?
Yeah.
Any questions about that? Okay. So now we need to say, what do we put first? It's always our debit. So I'm going to go back. I'm going to create my journal entry. As soon as I figure out how to create my journal entry. Oh, never mind. I got to do this first. Okay. So B, we're going to have office supplies as a debit of $1,250. And we're going to have cash as a credit of $1,250. And number 3, we purchased equipment on credit. So in this example, credit is not being used. I'm sorry, cash is not being used, so we're going to do it on credit instead of with cash. So I got smarter that time. We know it's going to be equipment. And the terminology for credit is AP because we owe somebody else money. Liabilities are minus plus. So this is clear. And this is BEA because this is an asset. And this is a liability. So if we purchased $10,050 of office equipment on credit, so now we didn't have any office equipment before. Now we got $10,50 worth. That's a 0. $10,050. And we didn't owe anybody any money before, and now we owe them money. So we owe them $10,050. So now my debits equal my credits. I don't know why that's blue. That was cute though. Oh, maybe they do. Computers are smart. Does that make sense? So we're gonna go over to our T table. And we did not use cash, but we did use accounts payable. I don't remember what the debit and credit was. So equipment was the debit. So this is letter C, I believe. So 10,050 bucks. 10,050 bucks. Okay. And then accounts payable was our credit. Was our credit. So that's going to be 10,050 bucks. All right. And then we're going to go back to our journal entry. I do enjoy doing my journal entry second. View transaction list, number 3. So we had office equipment as our debit of 10,050 bucks. And that's going to be our accounts payable because we owe somebody some money. All right. And then we're going to hop on over to number 4. All right. So the company received $15,500 for cash as, the company received $15,500 cash as fees for services provided to a customer. All right. Come back here. So my accounts that I am working with, what's my first one? The easy one.
The first
The first T table that I'm going to use.
oh, cash.
Yep. What's my second one going to be?
Accounts payable. No.
So we got this money,
Mhm.
and this for services rendered, which is the key part. So the company received $15,500 cash as fees for services provided to a customer. So they use all these words, but all they're saying is, hey, we did some work and they paid us $15,000.
Right.
So if I look back over at my T table, I'm going to find out what they use for revenue. Okay, so their revenue account, they're using fees earned as their revenue.
Oh, I see it.
Yep. So I'm going to use fees earned. Cash is an asset. Asset uses DEA. All DEAs are plus minuses. It's always debit credit. Always debit credit. Fees earned is a revenue. We use CLR for revenues. So this is going to be a minus plus. So once I know that, then I can figure out where my numbers go. Did my cash balance go up or go down?
It went up.
Yep, because I received $15,500 cash. Okay, so did my revenue balance, oh, where is that coming from? NCR Silver. Give me 1 second. Okay. So my revenue, does it go up or go down?
Up.
Yep. So my revenue goes up. So do my debits equal my credits?
Yep.
Yep. I got 15,500 debit and 15,500 credit. So now I can go and create my T table. This is letter D. So figure out which one is my debit. My debit was cash. So I'm going to do my D here. 15,500. And this was offset by my credit of fees earned. Credit simply meaning right-hand side of the T-table. It doesn't mean increase, decrease, plus or minus. It just means the right-hand side of the T-table. So I got my T-table done for that one. Now I'm going to go back and do my journal entry. And my debit was cash. My credit was fees earned. Oh, no, that's not it. Fees earned. So 15,500 and 15,500. We're done with that one. So then the company paid $10,050 cash to settle the payable. So my okay, remember the previous one, we had purchased the equipment on credit. And now we're saying, hey, we got a little dough. Let's pay our debt. So this is still debit credit. Like always, equipment is an asset. DEA. Stop it. Stop it. Stop it. Stop. DEA. Cash is also an asset. So that's the A. So this is a plus minus, and this is a plus minus as well. I'm gonna add another account onto this, another T table. And this one is going to be AP. Okay. Now, this is tricky because this is how people want to look at the equipment and cash. So this is a liability, so clear. And this is minus plus DC. Equipment is actually not impacted in this transaction because we already recorded the $10,050 when we first got the equipment in. The only thing that's impacted in this transaction is accounts payable and cash. And it's simply saying, okay, our accounts payable balance before, so this is the before transaction, not the current transaction, okay? Our account balance that we had before, we don't want our records to show that we still owe that. So since we don't want our records to show that we still owe that, we have to get this account balance to 0, okay? So we want our AP balance to go down. So we're going to use the negative side. So we're going to put $10,050 here. And that works out because if we have a debit on this side, we need a credit on this side. And that makes sense because we had cash, but our cash went down so that we can fulfill that obligation, right? So our debit is still equal to our credit. It's just that in this situation, it's 2 minuses. We want our AP balance to go down and we want our cash balance to go down. So now our AP balance is going to say 0 because we don't owe anybody anything. And our cash balance is going to go lower by $10,050 because we use that cash in order to pay our AP balance off. So I'm going to go ahead and do the journal entry. Our debit was AP for $10,050. And our credit is cash for $10,050. So then we're going to do hey, do what I asked you to do. Did this freeze?
I don't think so.
Don't do that. All this hard work. that we didn't did on this? Okay, so it's not that screen.
Yeah, I think it froze.
Huh?
I think it froze.
No, I did so good. But you guys can still see me though, right?
Yeah. Oh, the screen, yeah.
Oh, you know, that might have been my cell phone. Please don't do that. Hi, cuteness. These kids are so cute. Why would you do this to me? Oh, yes, I do. Okay. 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 Thank you. Okay. We got it. All right. So we were doing AP and cash. So AP goes down. I think that's E. Are we on E? I'm guessing E. $10,050. And then equipment did not change. Accounts payable went to 0. You see how the balance is 0 now for accounts payable? And then AP and cash, sorry. Cash is E. And the account balance in cash is going to go down. See, right now it says 115,000. It's going to go down to 10,000 by $10,050. So now it's only 104,950. You guys see that? All right. So that's that transaction. And A, B, C. Okay, that was E. Just bear with me. We only have 4 more. I'm going to go through these kind of quick so you guys can see the end result. And the checks are all yeses. But this will help because this should be exactly how the quiz is going to be next week and how the homework is tonight. All right. So this one, the company billed a customer $2,700 as fees for services rendered. So we're going to go with fees earned. And since we did not receive cash, because if we receive cash, it would tell us. We did not receive cash, therefore we're going to use AR, which is receivable. RECEIVABLE, I think. Receivable is an asset. So we're going to do DEA. So plus minus debit, credit, and fees is a revenue. So it's a minus plus. The accounts receivable balance went up because it was 0 before. Now it's 2,700 to show that somebody owes us money. And our revenue account also went up by 2,700 to show that our revenue increased. Now our credit is equal to our debit. Cool beans? Our journal entry says that we're going to do our debit first, which I forgot that fast. So our debit is accounts receivable of 2,700. Our revenue, fees earned, is 2,700, which is a credit. Then we're going to do our T table. So our cash went up. So it was a debit. So this is F. Was that 2,700?
Looks like it.
I think it was 2,700. And then our fees earned goes up. By 2,700. So that's one, that's that one. And then we only got 3 more. All right, the company paid $12.25 cash for the monthly rent. All right, so our accounts is going to be cash because we use cash and rent expense. So plus minus DC, rent expense, DEA. So this is the E here, and here's the A here. So this is actually plus, and this is minus. Because rent expense is E, so it's a plus minus. So our rent expense went up by $12.25. Our cash went down by $12.25. Our credit equals our debit. So cash was our credit because it went down. Rent expense was our debit. As soon as I find rent expense, here it is. Can you guys hear my son?
No.
He is so loud. I'm getting me a new baby, a new quiet one that doesn't scream playing Fortnite, all that. So cash is going down. Cash is our credit. So there's our journal entry. And then let's create our A, B, C, E, F, G. Don't do that. Really? Our dollar amount was $12.25. I think it just does it to numbers. That's pretty dope though. And then rent expense is located down here. All right, so that's that one. Now we have two more and then we'll be done. So why would they number these here and then put them as letters in the T table? Like, why would you have me doing that kind of thinking? Like, that's completely unnecessary. All right. So, yes, I do. This is a good one. The company collected $1,125 cash as partial payment for the accounts receivable and transaction. So, we want to change our AR balance and we want to change our cash balance. Both of these are assets, so they're plus minuses. All right. Our asset balance, it had a balance before, but we want to decrease our AR balance, and AR is the money that people owe us, right? So since we want to decrease the balance, we're going to go down. We received cash, we collected the cash, so we want to go up with cash. So now my credits are equal to my debit. Credit equals to debit. So my debit is first and it's cash of $11.25. So cash of $11.25 and accounts receivable is a credit of $11.25. Yes, I do want to say that. So we have an increase in cash, GH. No, there's not what I said. There we go. Okay, we got H of $11.25. And then our accounts receivable balance. Why don't we have an accounts receivable in there already? That's not good. Maybe delete it. Did we do F?
I thought we did.
So where's my 2,700 at?
Right there.
That was wrong.
It's cash.
The company billed a customer $2,700 as fees. Okay, this one is wrong. This should be over here. And the reason why I know this is because I should have, if I'm going to decrease accounts receivable, there should already be something in that account. So I must have made a mistake doing that earlier. So let me change this to H. 1125. All right. So where's my other asset? Okay, well, that's right. Okay. So I did the H, and then I need to decrease AR by 1125. So this is my H and 1125. And my debits and credits match. And then we just have one more, and then we are done for the evening. All right. So Casey Spade withdrew $10,000 cash from the company for personal usage. So this is the one that we use for drawing because they took money, the owner took money out of the business. So we have drawing. And what did he take out? Oh, that's not what I wanted. Hold on. He took out cash. So there's our cash. Drawing, DEA. There's our D. So it's a plus minus. Cash is an asset. So it's a plus minus. DC, DC. So he withdrew $10,000 cash. So our cash balance is going to go down by 10,000. Our drawing account is going to go up by 10,000. Previously, the balance in this account was 0. We want to make it 10,000 to show that he took $10,000 out. So it's going to be a debit or a plus in this situation. So our debits are equal to our credits. So drawing is our debit. So we're going to do drawing of 10,000.
Sorry, my computer's dying.
All right, and then the other one is going to be cash. Because he took $10,000 cash out. And then we're going to do our T table. And so we're doing H. For $10,000. And then we're going to do withdrawals. This account went up. So this is going to be H. 10,000. You guys know why I choose the size that I'm choosing, right? This is drawing, so it's gonna go on the left-hand side. And then this is cash, so it's gonna go on the right-hand side. All right, so we did all of our transactions. Let's cross our fingers. And see if we did it all right. We can't see. Oh, did I choose the wrong letter? Oh, it's the wrong letter. It's right, but it's the wrong letter. What was our letter? See, that's why I said. That was too confusing. Hold on. A, B, C, D, E, F, G, H, I. It was 9. So now it was I. Okay, that should be an I. Trust me, it's right though. It needed to say I where it says H. I got the letter wrong. It's the simple things in life, I tell you. And it won't let me fix it. So this is, if I return to question, will it let me? Watch is gonna start it all the way over. We're not doing that again. Okay, cool. So let's change this to I. Now let's check our work. We did it. Make sense? I can't hear you guys, but I'm assuming that you're saying, oh my God, it makes so much sense.
Oh my God.
Yeah. All right. So from that one, did you guys have any questions or anything you wanted me to clarify or explain?
I mean, I understand it much better now. I've seen it being.
Mommy.
Yeah.
Yeah.
So when we do the quiz is going to be the same way. There's a homework assignment that kind of gives you what the quiz is about. What is added on the quiz is the trial balance. And all you do on the trial balance is you take that ending balance. So for cash, the ending balance is $94,850, and you put that on the trial balance. You take accounts receivable, the balance is $1,575, and you put that on the trial balance. Make sense?
Mm-hmm.
Yes.
Okay. I love accounting. I love it because it's a right and it's wrong. It's like there's the only option, right and wrong.
I had a question.
Yep.
When will grades be posted?
As soon as I learn that, figure out how. So I'm meeting with Miss Okiri on Thursday, so tomorrow, and she's gonna show me how to post all of the grades and stuff.
Okay.
So once she shows me how to post the grades, so they'll be in there tomorrow. That was my next step. This is my first online class there. Actually, it's my first class period at this particular school.
Okay.
I'm not sure how to use that part yet, but they'll be up there tomorrow. Okay.
All right.
Okay.
Any other questions?
No, not at the moment.
Okay, well, my cell phone number is 513-903-2038. Please do not hesitate to text me if you're going through your homework assignment and something doesn't make sense, or you just have a question. You can get to me a lot easier with that than I'm not as quick with, but I'm super fast with text messages. And I'm getting ready to post this video, and I'm going to post the homework assignment for chapter 3. Okay.
All right.
All right. Well, good night, guys. Thank you for coming.
Good night. Thank you.
Bye. Now I gotta figure out how to stop it. Pause it.